The internet is full of people saying you need 10 rental properties to be financially free. But what if I told you that strategy could actually trap you? I've built a $10 million property portfolio, more than 20 properties across Australia, and I stopped. Not because I failed, but because I realized the strategy that made me rich could just as easily break you in 2025. So before you chase that 10th rental property, let me explain what's really going on in the market and why I think most people should stop trying to build empires and start doing this instead. So why is it so hard to build a portfolio today? And what's driving these prices? Real estate has never been more expensive, yet somehow you still see gurus online bragging about 20, 30 or 100 properties. Well, as someone who's been there, it's not all cakes and roses. And honestly, is this strategy even viable in 2025? Well, stick around because by the end of this video, you'll know exactly whether you should double down on property or pivot completely. Later in this video, I'll tell you what I think about buyer's agents, and it may get me in trouble. So essentially, housing affordability is getting worse. Since 2002, the Sydney house price has gone from 8.3 times the average full-time wage to 14.4 times in 2025. I could keep throwing stats at you across states, but you all know this. Everyone is talking about how expensive property in Australia is. The trend is also replicated across the developed world to varying degrees. What is fueling this though? This is where you get the differing opinions. And it depends on who you ask. If you ask a generic economist or buyer's agent or real estate agent, it's purely supply and demand. Immigration is high, we aren't building enough properties, etc., etc. But this isn't taking into account the relationship of lending and availability of credit and government policy, which has done nothing to alleviate property prices, but add fuel to the fire. For example, policies like covering mortgage lenders' insurance and allowing a 5% deposit do nothing but increase the amount of debt that people can service, allowing for higher and higher prices. According to predictions, we will also fall short of our property targets by 2029. This means that we won't be meeting supply and the demand will stay strong due to the need for a roof over people's heads and the increasing household debt. So, some people say we're in a credit-fueled bubble and others say it's just supply and demand. But who's right? Well, both are technically. We aren't meeting demand. We are also unlikely to meet demand in the future despite government's effort to increase supply over the next 4 years. And we are lending more and more money to people to allow them to further inflate property prices. We've seen this across different countries and even other assets. When you allow lending against them, the actual price of the thing itself gets inflated. Think university degrees across the Western world. So, do I think property prices will increase? Well, yeah, I do. But does that mean I think people should try and buy as many properties as possible as an investment strategy? Well, not really. Let me explain. First of all, these price increases are disproportionately affecting the poorer elements of society who are less likely to be able to save, and how long will this be politically viable? The government keeps saying it's helping first home buyers, but what it's really doing is giving them a bigger shovel to dig their debt hole. Still, we are seeing a changing political landscape, and I worry that worsening inequality across society will destabilize modern countries and put huge pressure on governments to actually do something to remedy this. We've already seen in Australia think tanks that come up with crazy schemes like a spare bedroom tax or changing negative gearing. Also with populist figures like Gary Stevenson from Gary's Economics with his tax the rich idea in the UK. Maybe public pressure will cause policies to make changes to things like capital gains tax. I just think the future is uncertain politically. Will that fix the big picture though? Probably not. But for the average investor with a few loans, it could be catastrophic. Especially if you've borrowed huge amounts of money to fund your portfolio in the hope that you will ride the capital growth wave, which is great, but if your cash flow gets screwed up because of some random black swan fiscal policy, you're in trouble. Also, let's talk interest rates. In Australia, we can't lock in interest rates for the life of the loan. So what happens when interest rates rise? It's a risk. You can't say it won't happen, as we've seen rising interest rates over the last few years, and yes, they have come down a bit now. But you never know when massive supply shocks happen from black swan events like COVID. I worry that if there's war, another pandemic, or we get artificial general intelligence or artificial superintelligence, this could have unintended and unknowable consequences that could affect investors, especially if you're highly leveraged. Are you looking to invest in property in 2025? Have you invested in real estate already? Stick around because you're going to want to hear this. So what is this buy and hold strategy anyway? Basically, it's where you buy a property for less than it's worth, refinance up to whatever loan to value ratio or LVR the bank will allow against that higher value of the asset, and use that money to buy another one. This cycle repeats until you have a large portfolio and you're making capital growth while slowly paying off the debt. For example, you buy a $500,000 property, borrowing $400,000. Then the property increases in value to $625,000. You can refinance, borrow up to $500,000, giving you $100,000 to invest in another property. Now you can buy another property for $500,000, giving you a total portfolio worth of $1.125 million. The benefit to this is that when you get roughly 5% yield and 5% capital growth, you're making $112,500 per year on your initial $100,000 investment of your own money. That's the power of leverage. This can be repeated until the bank won't lend you any more money. That sounds great, but what's the catch? Well, the catch is the risk and the interest payments of the loans. Using my example from before, if you had $900,000 worth of debt at a 5% interest rate, you will pay $4,832 per month or $57,984 per year. And at 5% yield, you would potentially be making $56,250. And by the time you include insurance, rates, maintenance, body corp or strata, you'd easily be going backwards, which is a loss you'd have to sustain year on year until the rents improve to the point where it is self-sustaining, or you have enough capital growth to sell one to pay off the other. Now, I know that people will say, I can get better yield than that, or I can get better deals, but hey, these are all just general numbers. I know you can get better yields, I know you can get better deals, but these are an example based on current rents and interest rates. The problem with this is the sustainment of a loss year on year, which means you're locked into your job. If you lose your job or business doesn't pay you as much money or something, you could be in trouble. Also, if the interest rate increased, you can be in trouble. If they take out negative gearing, you could be in trouble. If they decide to increase capital gains tax, that means you need to hold longer to sell the property to make the same money. If we get AGI or ASI and your job gets replaced with a clanker, you're in trouble. I hope UBI covers interest payments. I can also tell you from experience that this is a stressful exercise, especially when you're at the mercy of markets and broader economic forces like interest rates. Psychologically, I think people are less likely to take a risk and leave jobs they hate if they're locked into millions of dollars worth of mortgages. Do you want the flexibility to leave your job and start a business or travel? Well, how likely are you to do that if you have millions of dollars of investment loans and still need to pay rent or a mortgage for the place that you live? At the end of the day, you're making money on paper and can make money in the long term. Trust me, I've done it, I've made money. But you should be aware of the risks and potential downsides. It's also potentially a 10 to 15 year game plan. I hope you don't plan on buying a house to live in that time, because you will have locked up your serviceability with the banks and you won't be able to unless you sell something or earn significantly more money. Quick word on incentives, because incentives explain everything. One issue I have with the investment property landscape at the moment is the burgeoning industry of buyer's agents. Now, don't get me wrong, I've used buyer's agents and I love them because they've made me lots of money. But I have a few reservations with the industry. For starters, when I started investing in property, no one knew what a buyer's agent was. Now I can't swing a dead cat in a Sydney pub without hitting 3 of them. And the problem with that is that now you have more agents vying for the same amount of deals, which by nature drives up demand for the affordable and good investments, which then increases their price and therefore makes them less valuable as investments. I even had a mate who was using a buyer's agent to get good deals, and he accidentally got a better deal on the same property the buyer's agent was offering him. So just because the buyer's agent says they can get you the best deal doesn't always mean that it's the best investment. Even some of my properties I've bought through buyer's agents have been hit or miss. Don't get me wrong, it can be incredibly valuable to use one. There are just no guarantees that it will be a good investment. I'm also not entirely sure about the ethics of when some, and this is not all buyer's agents by any means, use their platform to be personal finance gurus and then spruik property as the best investment option, but then link you through to their mortgage broker who gets a kickback from the bank, then into your buyer's agency to sell you a property. Look, I get it. I respect the hustle. I just think it's like asking a baker what you should have for lunch. He's going to tell you to eat a sandwich. By the way, I sell bread. I think there's a massive incentive bias to push property. This is where I'll shamelessly plug myself. I'm not a buyer's agent and I have no aspirations to be one. I'm just a guy that has been through the process and come out the other side with a different perspective. I also just want to be able to give the best information possible to help as many people improve their financial situations. I want to do this without an agenda or incentive bias to push one particular asset or another. I just want to give the facts and my experience in helping to grow your net worth on the journey to financial freedom. So please help me stay free from incentive bias and like and subscribe to support the channel and allow me to give you the best information possible without having to become a buyer's agent and sell you a property. So what should you do instead? Well, I think there are very viable investment vehicles. For example, dollar cost averaging into index funds like the S&P 500 or the S&P ASX 300. These give you decent historical returns, of 10% and don't rely on leverage. They provide you with exposure to the top performing companies in a market, and you get to take advantage of compound growth to increase your wealth over time. It's simpler and, in my experience, less stressful than taking on millions of dollars worth of debt. Of course, these returns are historical and not an indication of future performance, and this is general information only and doesn't take into account your specific financial situation. If you want more information on this topic, please like and subscribe. I will be doing a deep dive into dollar cost averaging and why I think it's a better strategy for most people rather than trying to build a large property portfolio. I look back at the money I made in real estate and can't help but think it would have been easier and much less stressful to achieve similar results through index funds. Property gave me wealth, yes, but index funds give me peace of mind. Thanks for watching.